welcome again to episode 6 of Next Time with Travis and Eric. And I am your host, Travis McGregor, and my co-host, Eric Maloney.
Morning, Travis. Hi, Emery.
And Eric's in New York, and I also have here in New York, also is Anne-Marie McAvoy. And hello, Anne-Marie.
Hi, thank you so much for having me.
Yes, and to continue the conversation, as we started this, 1 through 5 episodes looking at, security is a big thing these days, and everyone's getting hacked, and it's all in the press and everything, and it's a very vulnerable time. So we looked at, okay, blockchain's interesting. That is half of the equation with immutable data because it's only in software and server cloud nodes, and we're proposing that we have hardened, security in hardware and silicon. So you have immutable data operating in silicon as well. You put the two together, you have this great environment for executing what you want in financial transactions and so on. We moved then to look at tokenized deposits at the ledger. Nothing really changed. It's this new database. And we started to look into the investment ways that you can automate and efficiencies and so on in trade finance. But really, this is really the epicenter. This is the focus of what this all leads up to. You can have all the best security in the world, the AI and everything, doing all the things. But if you don't know your customer, which is at KYC, which is a principle in all this, and you don't understand how to operationally look at the AML and if it's happening in money laundering and so on, and I will say this, is that I really enjoyed the last 7 years of seeing the FinTechs and the banking as a service and so on and so forth mature and bring a new face to customers, new functionality, potentially use cases and so on. But at the end of the day, what I've seen in the press, and I won't get into all the names out there, but it is significant. And we're seeing that UK and so on is moving to say fintechs have to back their transactions with cash on reserve. More steep than Basel III with banks because they're more regulated and so on. So I would start with this: when we're in this KYC AML crisis, if you're doing all online transactions of any financial mechanism, you're vulnerable to this, especially in banking, maybe not on the Visa, MasterCard, because they have 90, 120 days to figure out how they push the fraud and problems to other people. Sorry, Visa, MasterCard. Any event. So Anne-Marie, maybe the question for you, being in the field for so long and so astute in the matter, what are banks required to know about their customers, and how does that lead to looking at if they're committing crimes, financial crimes, in money laundering? What do they need to know categorically? Is it just an ID check, or what else do we need to know as a bank?
They need to verify the identity, and they need to know who the person is, and more broadly, they also have to know what the expected activity in the account is. So if you have an account where it's just a normal person with a regular job and maybe works locally in some little shop, and suddenly there's millions of dollars running through the account, that is not expected for somebody like that, because you have a picture of what you expect from that customer, then that should set off alerts and alarm bells, basically, so that the bank would know to take a look and investigate and figure out if there is something wrong or not. Maybe the person won the lottery, maybe the person got an inheritance, maybe there's a very good reason for it, but you have to figure out what that reason is. And you have to document it. So you really have to have a whole picture of the person, not simply checking an ID.
I would, you know what? How many fintechs, website only, iOS, Android app companies actually know the business of their company, what they're doing, and what people they're selling to, and who they do trade agreements with for employees? Wow. So that creates a whole new dimension I don't think is captured today. Eric, being in the AI side, is AI looking at the behavior of people spending and so on today? I mean, can we just do an ID and have AI go and with a great degree of certainty go and say, hey, I know where this
There's a lot of things AI can do. Yeah. So there's a lot of things AI can play a role in. Just simplified, AI can augment. It can augment searches, it can augment forensics, it can augment many things. Don't look at AI as necessarily bringing a new dimension yet to the KYC process, other than accelerating it, right? That's the first thing. But getting back to what Emery was saying, and something that was, I think, critically important, is beyond the KYC is the KYB, which, Emery, one thing that always interests me is, how do you have a recognized agent on behalf of a company? And now with the upheaval in the commercial real estate market, and there's going to be a lot of bankruptcies, a lot of mid-tier banks, in trouble. There's going to be a lot of assets changing management and ownership. That's the thing that is concerning to me. That how do you keep the charlatans out? How do you know that the people who are assuming responsibility have the rights to assume responsibility, to have a role? That's another layer. It's built on top of KYC that I think isn't really being addressed now. That is going to be quite painful for a lot of people very soon.
That's very true. Yeah, and you have to also, if you have a business, it's not just the owner. You have to know who is in control of, and there's basically an analysis that you go through to figure out who the people are who have control of the business, as well as those who are the owners. So you need to have both, which is not always easy to figure out.
Well, I'll say this right now. You're a legal person. I'm a legal person. I'm not a lawyer. But what I do know is I've asked every company I do business who controls the company.
Mhm.
And, oh, he has 51%. You can have one share or even no shares and control a company. It's about legal contractual nature. And I think that the agent, what Eric's saying, and then making sure that that group is getting the right orders from the control group, and then the control group has to be, are you guys fraudsters and bad actors and everything else? And so it's so I see this as, from a KYC, it's not all this auto AI digital. Maybe to go back to the augment side on the AI is if you have trust points, if you have control points, a high degree of certain data pools or data lakes that you can pull from to shoot off AI to go find and verify what you already know. I think that that's where the augmentation comes from. And I, well, I'll just ask you, Anne-Marie. You help FinTechs, you look at all these things and so on and so forth. And don't no names. This is all about independent. What do you see is what do they need to do? Because today they do an IG check. It's one of these selfie phone and this and that, or liveness in Europe. They want someone to move around. But again, it's outside the credentialing process. It's static in one sense that it's not continuous. Maybe they hit it once and they re-verify the database to make sure everything was in the database. But what would you advise going forward with all these companies? You got to have some manual people sitting there and saying, hey, we got to look at all this stuff, right? At the end of the day, the human has to say, wait a second. The most responsible party says either this smells bad or it doesn't, right?
That's right. And in fact, there's a recent case where the regulators have commented that a company relied too much on their automation and weren't really analyzing the underlying information enough. And it's a real problem for a lot of the fintechs and the startups because many of them don't have a lot of employees. So they tend to run pretty lean. And so they have to have, where they should have, an anti-money laundering officer. And many either don't, or they have somebody who's the anti-money laundering officer, who's also the COO, who's also maybe has a couple of other titles as well, and really doesn't have a background in anti-money laundering.
You're every hat in the business because you have to be, right? And you're not suited for it, maybe.
Right. So and that's very problematic because the regulators will come in and they will look at who your anti-money laundering officer is and what their qualifications are and whether they're appropriate for that role. And the reality is that given, again, the structure of many of these fintechs, doesn't really necessarily make sense for them to have somebody full-time, for instance, like me, on staff, which, if you're a bank like Chase or Citi, you're going to have multiple people like me on staff. You're going to have probably, I used to work at Citi, and, I remember, and this was a long time ago, and even back then, the number of lawyers they had would have exceeded the entire large law firm, or the biggest law firm in America. So, they have staff, but a lot of fintechs are not built that way. And so they're not able to do that. So, one of the things that they can do is they can contract with somebody like my company or other consulting firms to have part-time, basically, where they have somebody who is on call. They can do it where they have somebody who helps them, where they have somebody where they can tell regulators, we have some senior people who are capable and understand everything. And maybe we have meetings with them every week to go through what's going on, or whenever we have an issue come up, we reach out to them so that they can have backup. And it makes sense anyway, because this way they can watch for things. And the reality is, many times it's not just anti-money laundering that you're looking for. You're looking for fraud at the same time also.
Well,
So the company may be getting hacked. The company may have somebody internally who's stealing from them. The company may have somebody on the outside who's figured out a way in and who's stealing from them one way or another, or stealing from their customers. So you don't want any of that to happen either. And in the process of looking for any suspicious activity, that also will be part of it. So you protect the company as well. But most people don't think about that, unfortunately.
well, you're so sorry about that. You're preaching to the Pope with Eric in the sense that he's always about. I'll turn this over to you, Eric. Is about machine process, human process, business. These things need to be balanced in a sense. And Eric, please have at that, because this is a lot for everyone to consider. It's not just some automated cloud account that you with Google or someone that you throw up a website and you're a bank. So what do you think about this whole balancing of making sure you have the right people and staff and human process and business process in place?
So actually, it's not so much balance as priority. I like the way Anne-Marie talked about understanding the process. Smaller companies don't have audits and controls. They don't understand them. That's why they need people like Anne-Marie to kind of come in and say these are the things you have to keep attention on. I think for startups in the near future, we're going to take a lot of the things that Anne-Marie has historically done with the larger organizations, and I would like to see them institutionalized through smart contracts.
Yeah.
Because now you have another safety net where if somebody tries to manipulate the system, the smart contracts are pretty inflexible, or the exceptions are pretty well handled. So you can kind of see the fraudsters trying to game the system. It gives you the happy path and the smart contract and those other things that might be happening. So it really is prioritizing the audit and controls that are necessary. Then you'll be able to have the business processes more reliably run through that smart contract. And then if there is automation happening at the end of this, for the technical part, it actually gets easier. I constantly talk to customers who say, "Oh, just give me the technical widgets to do the forensics." I'm like, "Forensics on what? Let's come all the way back up to." Yeah, so everyone likes the shortcut. There is no silver bullet.
There's
All right. I mean, Mary, correct me if I'm oversimplifying it, but I think just understanding those audits and controls, and I like what you said about the global banks invest so much in legal because they have global regulations overlaying all of their different businesses. When you're a startup, you have no concept of the regulations that you're going to be required to adhere to by market, by geo, obviously, and other criteria. So maybe just to understand how you help kind of triage the future wave 2, wave 3 philosophy for a startup. So like you should know at this point when you enter this market, you will have to be ready for these things.
Right. Well, you try to figure out this. It depends, of course, what the business model is that they have. And part of what I do try to do is, as you're talking about systems and so on too, and AI, those can be very useful, especially for a startup. Although the problem is many times those are expensive too. So that's an issue. Many startups aren't really making money until obviously they're functioning for a while. They may, in fact, many times when they bring me in, we're setting up policies and procedures and trying to get certain approvals that they need. And there's no money coming in at all, except they become investors. So, you don't have income yet, and no income stream, which makes things very difficult. And some of these systems can be quite pricey. But if you can get good systems, or if they can build them in as they're developing their own systems, many times they have very good tech people internally who are developing their FinTech itself that can put in certain alerts and processes and monitoring systems as they're building it, which can be very helpful. And AI can be used. It can help with some of the background searches. It can help with cutting down on false positives. Even when you're talking about, you have to do sanctions searches, make sure nobody's on the sanctions list because you're not allowed to do business with them. That's strict liability there. So one of the big issues on the sanctions searches is that you wind up many times with people with very similar spellings of names that are not the same person. And that can take time to go through and figure out who you're talking about. AI can do that much more quickly. So there are things that can be used also for the monitoring, looking for patterns of activity that may be problematic. Again, AI can be useful for that. But at this point, the regulators also want to make sure that you have a traditional way of looking at it, of going through. You can't rely on AI for monitoring at this point, unless you can say also exactly basically what the thought process was behind all of the decisions that the AI makes as to how it's working. And we're not able to do that at this point. You have to be able to present the regulators with the methodology behind all the decisions. And so you still need the traditional way at this point. But you can marry the two together and try to make a better system. But you still need good people. And if they don't have them internally, they should reach out and find somebody like my firm or anybody who does this, who can at least essentially act as a backstop and help them through this, and also help them when the regulators come in, because even if they don't think that they are the ones at this point who regulators normally look at, many of these fintechs are customer facing in transactions that do involve funds at some point, that go through a regular bank at some point. They may not be the ones dealing with it, but regulators are coming after those folks as well. And that is something that I've been warning some of these fintechs for years, and they didn't quite take me so seriously. And now I see I'm being proven right.
So if I could just add on to what I heard, which is really important about that methodology and the intent, so you can explain it to the regulators. There's a concept in AI, different vendors use different terms, but it's embedding the business logic, embedding the regulatory requirements, right? Embedding the controls into the AI. A few good things happen. One is it actually helps reduce the cost of the AI, because now instead of looking at billions of parameters, it's looking at much more focused usage. The second thing is that it can turn around and produce consumable reports, because you explain the embeddings to the auditor. So, okay, this is the framework of local regulation we thought applicable, and here are the end controls we had in place. And you can see it's firing on at least some of the cylinders, right? The intent was there. So I think that you're right. We're hitting an inflection point where AI will take more of a role on, but it's not going to be self-educated. It has to be educated and trained through the correct embedding. And the more critical thing is it has to be validated. It's not a question of hallucination. It's a question of timeliness, because regulations change. And business models, I think you mentioned that earlier, it's very important. Business models, what are they? And they will change. Most startups start on one path and then find another way of monetizing. So they always have to kind of recast. And that is right now more of an art than the science.
Well, it's interesting you say that, Eric, because it's almost as if you need to give it context, you need to give it embedded. And my recent experience with the U.S. Patent Office is that, first of all, I have an online account. I do a lot of stuff with the U.S. Patent Office in PCT countries and so on. And the first thing they say is, don't trust anything on the internet. We'll send you something in the mail to notarize, take your photos and all that kind of stuff and send back, before they even deal with me personally over the years, right? And then in addition to that is that, using all the AI out there, I was with one of the international, in actually Paris, and there's actually a Paris Act, is that if you didn't say to an AI thing is, I'm using this as a basis to go and for my logic of filing and the rest of it, it wouldn't capture that, because it's just what you said. Regulations change all the time, and it's in recent stuff. And so on these, I'll call it the KYC, Anne-Marie. Thank you, Eric, for all that. It's beautiful. I'll call it the KYC crackdown. I read, and I got to go dive into it, so hopefully I'm not misrepresenting this in any way. Over $500 billion was lost in fraud. The government, federal government is saying, various agencies, because of all this stuff in the last, 2018 to 2022, program and programmatic type fraud issues. Anne-Marie, have you seen that in the press recently? What does that mean? Does that mean that the U.S. federal government, with all this stuff going on in different way banks use online and the rest of it, that money was lost directly to the U.S. government, $500 billion? Or am I way off? Am I crazy here?
Well, there's an awful lot of fraud, and unfortunately, the criminals have figured out whatever new technology comes out, the criminals figure out a way around it, or they figure out a way to use it to their benefit, and that's a big problem. So when you talk about the patent office not wanting you to go on a website because you may have a website that's cloned, and you think you're going on the patent office
That's right.
website,
That's
actually
right.
going on a different website
That's
that
right.
goes directly to fraudsters. So, and you know, you have your phishing emails, which open up computers to, you know, people can get into your banking and everything else. They can copy your keystrokes and get into your crypto wallet. There are so many different ways. But just to go back for a moment to the AI issue, the I think what's going to happen in time, Eric raised some very, very good points, is that you basically have a compliance program, probably a lot smaller than for anti-money laundering, but a compliance program essentially around AI, to make sure there's no bias built into the programming, to make sure that it is reviewed periodically and that there are no changes that haven't been put in, to make sure it's operating properly as expected, all of that. So that's one of the things that I think as we're looking at new areas to consider, I think that's one of the things that's going to be coming up is relating to AI and having some controls around it so that it does act properly and you can use it more efficiently in the long run. Because there are a lot of concerns about AI and how it's programmed and issues that regulators are bringing up. So I think if the industry builds those issues into it now, that will give the regulators less to complain about down the line.
Eric, any comments to that? We've got about 2 minutes, trying to keep my promise to this 15 minutes. Please.
Yeah, I'm very happy
Phenomenal.
with the conversation is a complimentary conversation. In other words, I'm agreeing with what Anne-Marie is saying. I think what's kind of full circle on how this conversation started, responsible AI has to have known actors, has to have known ownership, assets, and controls. It has to have known components. And that gets back to that training and embedding of these AI services. So it's a term that Travis and I use a lot is, you know, you not only you have to have these things, but you have to diligently reassert them.
Well, that's great. No, I love that. I really, really, and that's a legal term, assertion. I love that too.
And actually,
illegal litigators, you know, prosecutors here, but I mean, yeah, absolutely. It's starting from the basis. We got to reassert how we define this new era of digital commerce, right?
right. And Eric, you also raised a great point, and to me, it's one of the most important is training, and that goes into anti-fraud training, anti-money laundering, what you're looking for, how to do investigations, how to figure out who somebody really is, how to figure out what their profile should be, what you're expecting. All of that, you need to train people properly. And for the AI as well, to train them how to program it properly, to train them how to review it, to train them how to use it as it's going forward. So training, I think, across the board is a very, very important thing. And I think that people, especially these fintechs, ought to bring in experts, not just use people internally, because the internal folks may not really know enough to really teach their employees what they need to know.
Well, I just agree with that and to kind of wrap it up. The current state is usually not the healthy state. And that's the whole problem of using your internal resources. You kind of have to have that future state design. I agree.
Well, I'll thank you both. It's very, very exciting, full of information, very relevant, you know, pulling from the headlines of everyone on the crackdown here. I'm going to make wild and predictions at the end and so on and so forth. Are all these fintechs and so on, they're customer facing? Should they be prepaid under the prepaid rule, remittance rules, and money transmitter, and be like a Western Union in that? Because that's, you know, that's where Ripple is now. They're a remittance company, right? And it costs money, 5-6%, you know, much more than a Visa card. So it's wild. Is the government, are they twisting that to put them over in that category that's very heavily regulated on the cash society, in a will? I want to maybe both use a quick comment. We'll wrap it up. What do you think about that? Is that what's happening right now? Is it the customer facing that are not banks or now become money transmitters and that's it? Or how does that all, what's happening?
Yeah, it's hard to say, although I think that they're certainly looking at the banks, for instance, to make sure that those customer facing
Okay, fine.
folks are, so they're using it that way to make sure the banks are keeping track of what they're doing right now. But I think you're right. I think that may well expand, because the reality is the folks who are customer facing are the most likely to see problems. They're most likely to see some sort of potentially illegal activity.
That is
So they
absolutely
need to be part of this process.
beautiful. Beautiful.
And
Eric,
my
any
only
final
2
comments?
cents,
We'll wrap it up. Go ahead. Sorry.
my only 2 cents on this is the Ripple example is it's not just about commerce. It's not just about financial transactions. When you start looking at what you can do with distributed ledgers, there's a lot of process that is not monetized. It's not designed to be monetized. It's designed to execute business processes that some other endpoint. So right now, it's very confusing how the regulators are kind of saying, oh, if it's in the ledger and it records an asset, it's taxable, it's controllable, it's regulated. It's not fairly looking at what blockchain and the distributed ledger can do and how smart contracts actually function. So there's a lot to unwrap with the Ripple examples.
Well, this is exciting. I want to continue, but thank you both, Eric and Anne-Marie, for being on today. And I hear that weather's lovely in New York, so enjoy it when you can. It's a Friday. All right. Thank you so much. And everyone, this will be on our website and also on LinkedIn. And thank you very much and look forward to episode 7. Take care, everyone.
Thank
Thank
you,
you.
Andrew. Thank you, Travis.